New home sales are on the rise, providing a positive sign for the residential construction sector and the Abbott government. But what does it mean for homeowners and those planning to enter the market, let alone interest rates? The Housing Industry Association's Chief Economist Harley joins me now from Canberra to discuss. And Harley, can you just start by running us over the numbers for June and the June quarter? What does the data show?
Pretty good set of numbers all round, you'd have to say. We saw a 1% increase in new home sales in the month of June. We saw a 2% rise over the June quarter. That has new home sales up substantially in excess of 20% compared to a year earlier. So a pretty good outcome for the new home building sector.
Was it more units or standalone houses that the buyers were interested in?
Well, here it differs actually between the monthly result and the quarterly result. If you look just at the month of June, it was a strong surge in multi-units, up 16% for the month. You actually had a modest 1.2% decline in detached houses. But if you take the 3 months of April, May and June together, you actually find a modest rise in detached housing, but a modest decline in multi-unit sales, which is consistent with other data on that multi-unit segment of the new home building market.
From the numbers, where are the strongest and the weakest new home markets currently?
Well, encouragingly, we saw growth in 4 out of 5 mainland detached house markets. That's a nice result in terms of a fairly broad-based outcome for the quarter. You saw pretty strong growth in Western Australia, also in Queensland and in Victoria. That growth is occurring from different starting levels, if you like. It remains the case that Western Australia would be one of the strongest new home building markets in the country. But we're seeing encouraging signs in terms of Queensland new home building activity on the detached house front, and also Victoria after a couple of years of weakness. Saw only a very modest 0.4% rise in detached house sales in New South Wales in the June quarter, but that has been one of your standout new home building markets over the last couple of years. So probably just seeing a little bit of momentum come out of that growth after some really healthy outcomes over the last year or two.
Harley, for how long do you think this data will support builders or the residential construction sector?
Look, I think we've got some way to run. Indicators like new home sales and the comparable ABS building approvals, which is out later this week, they provide a lead indication of how much actual construction activity is going to occur 3, 6, 9 months down the track. And these indicators are at elevated levels, albeit they seem to be ever so slightly off their peaks for the cycle, but they're at very elevated levels by historical standards. That suggests we're going to see strong residential construction activity right through the second half of 2014, and I would suggest probably into 2015 as well.
New home sales are up, but what's happening on the price front? Have new homes also been part of the overall recent uptick in house prices?
We're not seeing a lot of inflationary pressure on the actual construction cost of new housing. It's a very competitive industry in the wider scheme of the Australian economy, new home building, and you find that the cost of construction in new housing is running actually slightly lower than the rate of general inflation. Where the pressure comes in for new home building is the cost of the land, as opposed to the cost of actual material and labour cost construction, if you like. And on the land front, we are seeing upward pressure start to emerge again, particularly in the strongly running markets of New South Wales and Western Australia. And that certainly puts the spotlight, I think, on the fact that every time we get to fairly heady levels of new residential construction activity, we always seem to find ourselves in the situation where there is a lack of readily available land to meet the demand, and that does place unnecessary upward pressure on land costs, which of course do feed through to final home buyer costs for new housing product.
With sales up, do you think there's likely to be any flow on to the current quarter's inflation reading, because it's already at the high end of the Reserve Bank of Australia's comfort band?
Look, it did come in at the high end, didn't it, in the middle of last week, and perhaps a tad higher on some measures than people were anticipating. But what we are seeing from leading housing indicators like new home sales and building approvals is a clear indication that there's going to be a further increase in the supply of new dwelling stock in the market. Now, in isolation, that increase in new dwelling stock is going to relieve some upward inflationary pressure in the Australian economy. So in that regard, the longer that we see signals that new home construction is going to continue to grow, so that new housing supply is going to continue to be added to, the more relief we can feel about a sector of the economy that's actually taking pressure off the overall inflation front.
Well, in your view then, where will interest rates be in the short to medium term?
Look, there seem to be a lot of views on that at the moment, don't there? But I would say that we're looking at stable interest rates right through the rest of 2014 and well into 2015, based on current communications from the Reserve Bank and what appears to be their assessment of economic conditions in Australia and overseas. I would say May or June 2015 is the likely starting point for a tightening interest rate cycle, and I would say that tightening interest rate cycle will probably be quite gradual to gather legs. So in terms of significant interest rate increases, I would venture that's probably a 2016 rather than a 2015 story.
HIA Chief Economist Harley, thanks so much for your time today.
Thank you, my pleasure.